Rajim. Bismillahirrahmanirrahim. Dear viewers, students, brothers, sisters, and elders, Assalamu alaikum wa rahmatullahi wa barakatuh. Today I'm going to teach you one of the most important topic or element of the accounting, which is being used by the accountants and accounting officers for registering or writing daily transactions till the end of each month for preparing the financial reports, which is called cash book. Before I'm gonna define the cash book for you, I would like to give a slight information regarding the cash book. What is cash book? Why do we use cash book? And what is the importance of the cash book in financial reporting? But first, I would like to say that any firm, any organization, even that's a business firm, business organization, NGO, government agency, trading agency, anything that's sole proprietorship, that's partnership, that's corporation, they use cash book for the purpose of recording their daily transactions chronologically. What does it mean chronologically? Chronologically means on date wise. Every day, any transactions in business, even they are in the shape of receipts, in the shape of payments, in the shape of vouchers, account payables, account receivables, cash assets, current assets, non-current assets, liabilities, current liabilities, non-current liabilities, owners' equities, anything. Capital accounts which occurs during the daytime, we record these transactions in the cash book. This is a sample of the small cash book which I have prepared it for you for your better understanding. Cash book is not a small, that could be from 100 transactions up to thousands or millions of transactions, depend upon the activity of the business. Small business up to 50, 100, 200, 300, 500,000 transactions every month, but the large businesses which are in the shape of partnership, in which from 2 up to 20 persons are included, and or the corporate, which includes of the more than 20 partners up to unlimited number of the partners, such as McDonald's, KFC, Shell Corporation, Robinson, Tesco, Walmart, LG, and so on. They are using cash book. Even they are using the QuickBooks software, but they need to prepare a cash book for putting all the records in their financial transaction, for preparing monthly, which is in 1 month, quarterly financial report of 3 months, semi-annual or 6 months financial report, and the annual financial report. And on the basis of this these cash books, we prepare the ledger accounts, trial balances, balance sheets, profit and loss sheets, and on the basis of these financial reports, the management team, that could be in the shape of directors, executive directors, chief of parties, and so on, they make decision to continue further for the business or not, to bring amendment in which products, increase the number of products and increase budget for the products which are selling well, and decrease the number of budget for those products which are selling slowly. So these are details which I give you. So let's say, tell me, what does it contain? It contains of the column date in which we write down everyday transaction like 010125. What was there? Here's 0102, 0127, 0131, 0131, 0131. This is called chronologically date wise. This is the first column. Second column. In second column, we write the description of each transaction. This transaction is occurred due to which thing? What was source of this transaction? In this we write down the source, like cash withdraw from the bank. How much? $10,000. So this is the source or the account by which we are using. The second one, purchase of groceries items. The third one is received cash from the sales of groceries. Fifth one, paid rental expenses. Sixth one, paid utility bills for the month of January, and the last one, paid salaries for the month of January. This is called description. If we do not write description, we would not understand what is this transaction for. What does it mean? Why did we pay it? From where did we receive this $10,000? How to which we paid this $7,500? That's why we are writing description for each transaction for your better understanding. It's necessary. Even out of these columns, anyone is missing, it means that your cash book is not correct and you may make mistakes or you may missing something. So the third one is file number. File number is used for the such as you have names and like my name is Jalal, somebody name is Ahmad. In English, if you come Richard, Mr. Brandon, Mr. Walter, and so on. These are the nouns or the understanding. This is not name. The understanding the each account for cash. We have JB 001, and for the purchase of grocery we have 003. For receive cash from the sales of groceries we have 004. In the same way, expenses 05. These are numbers. By these numbers we understand the names of each account. We can separate the accounts. For example, during 1 month we have 100 cash transactions. So to separate them from the other accounts, we write down JB001 and make ledger accounts of it, even if they are debited or credited. So again, I would like to tell you, this is left side, debit, debit, debit. This is credit, credit. Same like we prepare in the journal entries. This in the same way in cash book we prepare this, and beside this debit column and credit column, we have another column which is called balance. This is most important. If we do not have this column in the cash book, it means that we do not understand what happened at the last end or 31st date of the January, and what are the balance that we have in our hand, what are the cashes that we have in our hand. Even that's plus means we have more money like this, but if we have to pay some account payables, then that will be minus in here. So this is most important thing. That was all regarding the cash book, and I will define it for you. But before defining this, I have a request to you to press the bell icon, like, share, and subscribe my channel. That I will be able to provide you more good videos in accounting, in cost accounting, in statistics, in financial accounting, in management. So I will give you the daily occurred examples, not examples from the book, not examples from the website or from ChatGPT. No, This example which I have prepared, I guarantee if somebody find this example in the books of accounts or in internet, then I will pay you fine for this. So remember, and one thing else I would like to mention to you, in the next video, my next video will be regarding the, sorry, just a minute. That will be my second chapter. This is most important, rules of debit and credit. If you understand these 5 rules, I guarantee you, you will solve your, if you are a student in college, in university, at anywhere, if you're a student of BBA, MBA, CPA, CA, or so on, you will be able to solve the questions. If the time for the question is given to you 20 minutes, you will be able to solve that question within 5, 10 minutes or 15 minutes. I guarantee you. So this is very important. These are 5 rules. I will explain it in the upcoming videos of my second chapter. So let's start with our previous lesson, which is cash book. So I gave a slide information regarding the cash book to you. Now I'm going to explain the cash book for you and define it for you. What is cash book? And each column, I will define each column to you with an example. So let's start defining the cash book. In accounting terminology, a cash book is used to record and maintain all financial transactions in double entry bookkeeping system. What does it mean, double entry bookkeeping system? It has 2 sides, debit, credit, debit, credit. This is called double entry system. Remember, if somebody tells you single entry system, that's a simple system which people are using in the common shops. Sorry for this. In the people who have their own shops, they just have a copy and write down, I sold this blah blah item, or purchased blah 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 item. Blah, blah. This is called single entry system. In the shape of receipt, they give you a receipt. Receipt is also a type of single entry system. But in double entry system, it's most necessary to write the debit and credit column of each transaction. So this is called double entry bookkeeping system. And in my future videos, I would like also to teach you bookkeeping system. How do we keep the records in the QuickBooks? That will be in my upcoming videos. But I need your support. You have to support me. You have to like, share, and subscribe my channel. And then I will be able to provide you good videos, even if you are a student of BBA, student of a school, BBA, MBA, CPA, CA, ACCA. This is most important for you. Especially these videos are very good and effective for the BBA and ACCA, CA, and CPA students, because they are in the early stage of accounting and they don't understand what is journal, what is ledger, what is transaction, what is trial balance, what are the rules of the debit and credit. If you understood these things, then it means that you are an accountant and you will work in a firm as an accountant, account officer, account manager, or account director easily. So it provides a detailed date-wise record of receipts and payments showing description. So detailed, what I told you, detailed date-wise. I told you any transaction which happens in an organization, each day we record them chronologically according to the date-wise, number-wise, date-wise. Then in the second day, third, fourth, fifth, seventh, and up to 31st of each month. That's called date-wise or chronologically. Okay. date-wise record of receipts and payments. Receipts means which we receive from somebody money. We sold some items, that's receipt. Payments, we paid money to somebody, or we paid, for example, we paid money for the utilities, for rental expenses, for wages, for the machinery, for the purchase of uh, mm, computers, stationery, vehicle fuel, vehicle maintenance. These are called payments, showing description. I told you description. We have to write the description of each transaction. Why? Due to which happened this transaction. Debit column, which means on the left side, write down all those which come to you. I received anything to me, comes to me. I write down in the debit column. That's plus. And credit column, anything goes from me. I write it, for example, this goes from me. Hide it. This is called credit column. And the other one is balance brought forward, or balance column. In balance column, when we record debit and credit, automatically it deducts your amount or increases your amount, which debits to you increases, and credits from you decreases your amount. And also at the end of each month, which you have any amount that remains in your hand, the cash in your hand, even that's in your safe, in your bank, in your wallet, in your digital wallet, anywhere you have cash. So you should have to write down at the end of that, let's say MD, like this. This is the balance amount at the end of each month. So this is the balance. If I'm gonna write or prepare the cash book for the month of February 2nd, 2025, even this year is 2026, I have prepared these notes in the year 2025. I spent a lot of time on preparing these notes. Not only 1 hour, 2 hours, 10 hours, 12 hours, 15 hours, 16 hours to prepare a good and understandable notes for you. So in the next month when I'm going to write, I will write 2nd February 1st, 2025. This is balance brought forward $4,400 in the February. I will write it here. Then chronologically, if that was any transaction happen, I would like to write it here. That's it. And one thing else I would like to, sorry for this. I would like to show you one thing else here. I'm going to show you. That is, sorry for this, sometime. Here, how do we give formula to this? I will explain each one of that in here. So, up to this, I think you may have understand the columns, each column, what we did right in each column. And after that, accounting uses the cash book to ensure accurate and update monthly financial records, which are essential for preparing monthly, which is for 1 month, quarterly, which is for 3 months, semi-annual, which is for 6 months, or annual, which is at the end of each year, financial reports for decision-making purpose. Why? Because if we are over budgeted in some items or in some expenses or in some purchases, then we have to record that and give a complete detailed report in the shape of financial report and mention to the upper management we are over budgeted in this item or in this product. But if we are under budgeted in some products, then we have to write out we are under budget in this project. I would like to bring amendment in this budget. I would like to increase amount for the over budget, and I would like to decrease amount for the under budget. This is the process which the cash book helps us to bring amendment in the report. So let's talk about the contents of the cash book. Number one, date column. As I have already told you, this column records all business transactions chronologically. Chronologically means date-wise. Every day, any transaction happened on that date, we write that in the cash book. Meaning, each transaction is entered as it's occurred, whether whether it is in business firm, NGO, government agencies, or organization with accurate dates and amounts. That's the date column. Description. Description column. In this column, we record detailed description or specification of transactions such as items purchased, items sold, or other financial activities. I told you here is this is what I have written: cash withdrawn, purchase groceries, receive cash from sales of goods, paid rental expenses, bill expenses, salaries expenses. This is description, and this is date, which I have already told you regarding this. Let's now go. Sorry for this. I'm really sorry for this. I don't know what happened to my computer. The screen is gonna get black. Okay, not such a big issue, but it shouldn't happen. So the second one is description, I have told you, and the third one is file. File means file number. File number means to separate the each account from the other account. We gave them specific name. As for example, in your simple life, in our life, everybody has its own name. Like for example, my name is Jalal. Somebody else's name is Ahmad, Samiullah, Habibullah, Abidullah, Emanullah, and so on. And in English, Mr. Richard, Mr. Walter, Mr. Brandon, and so on. So in file number, we gave a specific name or specific identification to each account. Here, for example, I have given for the cash JB001, for the purchase of groceries 00 JB. This is not JB. Sorry, I would like to bring amendment this. Just a minute. Here it is. Let me first make it bigger. Instead of JD, it's JB. Sorry, sometimes I make a mistake like this, but I say sorry for this. So this is called amendment. I brought amendment in this report. It was a mistake. Remember, it was also a lesson to you guys. I made a mistake in here. It was JD. Oh, you made a mistake. Why you are making? What does it mean? So, to be avoid of such an objection, we have to review. So I made an amendment. This type of correction, even here. That's called amendment. Anywhere you bring amendment, that's called break correction. That's called amendment. So for the sales, we have 4. For rental expenses, 5. For the utilities, 6. For the salaries, we have 7. These are identification of each account by which we can prepare the ledger account easily. So, and the other one is debit column. So I have already given you this example. Debit, credit. All amounts which comes to us, that's written in the debit column. This column includes all amounts debited during the day, representing cash received or inflows of funds in daily financial transactions. Even there are payments, there are receipts, there are account payables, account receivables. They are written in the debit column. Sorry, account payables are not written in the debit column because they are credit account receivables which we have received from somebody. See, These are the common mistakes when we can make in the daily transactions. As I made a mistake, I said account receivables and account payables. No, account receivable is separate from the account payable. Account receivable is a debit because we have to receive from somebody, but account payable is a credit we have to pay to somebody. So always remember these slight mistakes, and if you be aware of such mistakes, if you give your attention to such mistakes and review your financial report, even you are preparing that on daily base, on monthly base, so you have to review at the end of each day your cash book, where I haven't made a mistake, what I have to do, what's the calculation. So at the end of each month also you have to review your whole report and then prepare a financial report in the shape of the journal entries, ledger accounts, trial balance, balance sheet, profit and loss sheet, by which the upper management are going to make decision. And the credit column is everything which we pay out, which goes from us, which is minus from us. That's called credit column. So this is right hand is credit column, and here we write those things which goes out from us, which decreases. So, and the other one is balance column. In balance column, the formula for the balance I have already in here. In this column, we will write down sum, but this is not in the PowerPoint. That should be written in the Excel sheet. And remember, the cash book is always prepared in the Excel sheet. If you prepare it in somewhere, some other apps, I think that will be not correct. The best thing to prepare, or the best app to prepare the cash book is the Excel. So in the balance sheet, this is the most important column, as it shows the current balance after each transaction, whether positive or negative. It helps ensure accuracy by allowing comparison between the book balance and actual cash in hand in a safe wallet or bank account. I have already told these things to you. So formula for this purpose we are going to use is sum is equal to balance column plus debit column minus credit column. Here. In here we write the formula, this plus this minus this column is equal to this. So in here I enter 10,000. Automatically it came 10,000. But on the date second we purchase groceries 7,500. So automatically this from this amount is being deducted, which comes 2,500. Again we receive 12,000 as a cash from the grocery sales. Here we this plus this minus this is equal to 14,500. The same way we paid the sorry for this, I'm really sorry. We paid the expenses. We deducted the expenses from 14,500. As a result, 13,700. Then we again deducted the 300 from 13,700, 13,400 as a result. Then we paid 9,000 the salaries. As a result, our balance amount is 4,400. And in the next month of February, on the 1st of February, we have to write in here, February 1st, balance forward from the month of January. That is $4,400. That was today's teaching. And again, I have request to you, press on bell icon. You will receive my all next upcoming videos. Share, share, and subscribe my videos. I will be able to provide you further good videos regarding accounting, cost accounting, financial management, statistics, and QuickBooks and management, and so on. I would like to teach you furthermore subjects of the accounting. Thank you very much for watching my video. Have a good day for those watching in the daytime, and have a good night for those who are watching at nighttime.